Hope all is well. Wanted to take a quick minute, share my thoughts, and more importantly, point you into the direction of a couple graphs as well as something I think people should pay more attention to, especially as we come to the end of this week and we start a new week of uncertainty, or more importantly, a basically much a true indicator of where everything is heading, and it's heading down for the old financial instruments as well as markets, and because of policy in a sense. And so we all know that last week Jerome Powell dropped interest rates a quarter point, and this graph here I want to show you guys right here. As you can see, whenever, according to the last two interest rate cuts, not too much long after, it resulted in a true correction to fair market value of the S&P 500. So as you guys can see from this little visual aid here, according to the last two interest rate cuts that came as a way of trying to respond to market conditions, we see what happened. And we have a smaller recessionary bar to the left, and then in the middle we have a bigger recessionary bar then to the right. Now it's just a matter of how big will this next recessionary bar be. And then to take it even further, here's another visual aid here from a trader. And I grabbed this because I thought it was very interesting, because it basically reflects the divergence between, as they say here, the dumb money and smart money. So while the central banks are cutting, you have the conventional investor, those that are basically doing what they're told to do because it's practical and it's ideal financial matters. Those are the ones, according to this visual aid, as you can see here, that are investing in an asset class as it goes up, out of the idea of not wanting to miss out on gains, while you have those that are considered the smart money, those that are in the know, those that know how to trade and how to actually profit from corrections. Those are the ones that are currently getting out. And so as we can see to the very far right of this visual aid here, the gap between those that are probably not necessarily actively doing it, it's more so the passive investors, those that have their accounts automated. And then, of course, we know from a investment standpoint, when it comes to all the 401ks, the pension fund, all those things like that, more than likely they're automated things that take place on behalf of people, not necessarily people directly allocating what they want to invest into. So the dumb money's getting in, and the smart money is getting out. At the same time, banks are cutting rates, and we all know how this is going to end. It's not going to end pretty. But I bet one thing most people have not been paying attention to is the fact that as of last week, when the Federal Reserve cut ranks as well as Brazil, and if you guys had a chance to watch the prior little update I did, there's several banks that cut rates. And then just a moment ago, just thumbing through the news, trying to find out what's happening, and more importantly, subject matter of gold caught my attention. And so I actually started scrolling through a variety of countries, looking at their central banking policies. Went to a website that I'm going to share with you now about the gold prices, and how as of last week, and it looks like on Wednesday, in a lot of major leading nations, the gold price went up significantly. And then I think about the fact that, most people are right now running to the dollar as a safe haven, because that's where capital happens to flow when distressed nations go through economic situations because of the reserve status. But it's one of the things where, while people are running to the dollar, the smart money, those that know how to preserve and those that are interested in profiting from the losses that are occurring and those that are going to take place, they're running to tangible assets, utilizing the remaining purchasing power of those dollars before policy really kicks in and they begin monetizing and easing and all types of other things like that, which will make those current dollars for less value. And so I want to share with you guys, just scroll around the world to a couple different countries and give you an idea as to what has actually happened in the form of gold prices in other nations at this current point. And the biggest takeaway from all this is the fact that the current price of precious metals, as well as other assets, not just gold, but silver and everything else that can be considered a monetary store value, is going up. Not necessarily because of it having more shine or more interest or gaining more interest, apart from the fact that the fiat currencies, as a result of monetary policy, is giving people more of a reason to get out of the conventional financial mechanisms that basically ultimately shows up in the price of metal. So let's walk through a couple countries real quick, and you'll get a chance to see for yourself the importance of getting your weight up. And I hope, if you were paying attention, that you yourselves were on that side of getting your weight up this past week and steadily, and probably even more so as we move throughout this year. But let's take a look at some of these prices here. So here's a website here, goldprice.com. I would encourage everybody, and if you're interested in finding more about the prices of gold, more importantly, I'm focusing on the gram, just because I believe that not only is it gram, single gram, or anything smaller, the most affordable, but also for those that are on the cash gold team, the gold team, it's easy to get 1 gram denominations of weight. And so basically, we want to give you an idea of what prices have been like over the last week. And so as you can see here, this is in the USD. And so as of now, it's 46.42 USD. And then if you go through here, it gives you an idea what the price range was as of last week. And so here you can see that on Wednesday, it was relatively low for the week, probably more so waiting on Jerome Powell to announce his decision. And once the decision came out that they were going to cut, is a surprise that gold went up to 46.40, it looks like. But then that's just here in the U.S. And as we know, the U.S. doesn't really get much mainstream attention on the price of metals, apart from those that are that know the value of it. But I want people to focus on is around the world. The price of gold also spiked, and it's those other nations that don't have a reserve currency, that don't have the privilege of being able to actually acquire metals at a more affordable price in comparison to what we can now, having the reserve currency. So I thought I would just tap on something and basically just scroll through here and see. So we got the sterling pound. Let's see what that was last week. So as of last week, 1 gram of gold at the current moment is 38 pounds. Scroll down, and we can also see last Wednesday, 37.40 was the lowest. And then once Jerome Powell made his decision, it went up to 38.20 and cruised around $38 a month. So that's, but almost a pound and more than what it costs to actually get a gram of gold. And so we're supposed to be in economic expansion. So imagine what's going to happen when, it's official that they announced that we are in a slowdown economically. So here you got a variety of countries here. So I want to stick to more of the known countries. And so Argentina peso right now is not really doing too well. I was actually looking at the bank rates, and they're trying to keep the exchange rate between 40 and 50 pesos to $1, which is unbelievable. So as of right now, 1 gram is 2,000 pesos. And so as of Wednesday, it was below 2,000. And then by the end of that day, at the end of the week, up until now, it's 2,060 or 70. So once again, it costs more paper to get your weight up. What else we got here? Scroll down, and Brazil, same day Jerome Powell dropped, so did their central bank guy there. So we got 1 gram of gold equals cost of 180 Brazilian reals. And then, look at this. Last Wednesday, the price also went up from 173-ish and settled about 180-ish, what it is now. So once again, this is not coincidence at all. Let's look at the Swiss franc. And so the Swiss franc is unique because they're already in negative territory, but yet because of the economy being a lot different than majority of the other economies, it's interesting there. But once again, it went up and then came back down a little bit. And I'm assuming that was a direct attempt by their central bank there and powers to be. But other than that, so I can scroll through all these countries here. As you guys can see, every country for the most part and their national currency is listed on here. But one thing I want people to really take away from all of these countries here is the fact that they are all, as of right now, subject to monetary policy that's presented by our central bank here. So whatever our central bank does, they will follow eventually. But yet the only difference is citizens, especially if you're watching this and you're not in the United States of America, whatever currency you're using, it's basically a ticking time bomb, because it will implode more than likely first. Then people will rush to dollars, but then dollars is no different apart from the reserve status. But once that comes to an end, think about how much paper is going to cost to get yourself 1 simple gram of gold. So long story short, to end this up, now, as you're watching this, in my opinion, will be the best time to really think about going into this week and how you're going to get your weight up, however you can, whatever you do. For those that are interested, of course, the RTD Gold Team is a good way to automate it, so it's just natural. But I want you to realize, if you're in these countries here, I could scroll through this entire list, millions and billions of people that are subject to monetary policy. And as we see, it's a race to the bottom with purchasing power. So what that's going to mean is, after this video, after I end this video and moving forward, we may never see prices as cheap as they are now in normal conditions, apart from the manipulation or whatnot. But moving forward, what you can guarantee is that the cost of a gram will only go up. It will not go down. So anyway, just something to think about. I thought I would share this because, going through all these prices here, it goes on and on and on. And everybody experienced some type of, here we got the Russian ruble, 3,000 rubles right now. And let's see if perhaps on Wednesday theirs jumped, if a map shows up. So as of now, I don't see a little graph here that shows the price line. But once again, I'd imagine it's no different. But other than that, I wanted to send this to you guys. Hope all is well. Definitely leave a comment down below. Hope you're paying attention to what's happening and getting your weight up, taking advantage of utilizing your currency as best you can for your own benefit and not trusting anybody else to do it, but taking matters into your own hands. Of course, this is not financial advice. This is just one man's opinion. But other than that, enjoy your day. Peace.